All right, good morning, everybody. This is Wednesday, October 7th, and this is our session is going to go on from 8 o'clock to 9:30. Susan Batchelder has her session that's starting at 10 o'clock, so we're going to need to get out of here before then. And trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose, and before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. And now we got that out of the way, let's go to the charts. Right now I'm looking at a US Swiss. I'll change my chart here.
Jay is back in the room today. He actually said that he just did 2% on the Euro US.
Oh, good. I see Christine is here. Let me move Christine on over.
Morning, Christine.
And welcome everybody. And here we are. So right now we had a nice little break of the wedge coming back and retesting the trend line. If it comes back and retests and get a red candle, I'm going to be in this trade short. We have a nice little pullback on our RSI. So basically I drew the wedge. Here is the wedge alert at, and I tucked it into the D, was right before where the wedge alert was. That was the low. It came back. That was the bottom of the wedge. We just got a 5-minute break, coming back, retesting the wedge. As soon as I get a red candle on the 1-minute chart, I'll be in this trade. And the target is going to be pretty much this area right over here where I drew the stick. And so the target will be somewhere around in this area. And I'll be looking at pretty much this area right in here, which is right at the bottom where this big move started up. This would be the bottom. This would be the, and I'm going to take this thing short. It will let me do that. And this thing always gives me a problem here. I didn't get a great fill, but that's what we can normally get. Let's say we have a spread of, it doesn't tell me my spread anymore.
1.6 right now?
1.6 right now, yep. Spread of 1.6. You see, we had a nice move down, pulled back, came right back up into our little zone, and now it's breaking back down again. We had the RSI came on up. We may go up. I wouldn't be surprised to see it come up a little bit more, a little bit higher one more time. But right now we're in this trade, and the 7-pip target is down here. And I'm going to be a little bit more, I'm going to mark this area where the 7 pips are. I'm going to give it a 12 pip stop just because I like keeping it out of harm's way to make sure that we can protect that. Let's see where this gives us here. I want to keep my stop above this moving average. If it comes back up into the wedge, I could probably bring this back down a little bit more. I'll give it a 7-pip stop, and we'll see if that helps keeps us out of harm's way. 7 pips. If we're going for a little bit more than right now, there's the 7-pip target. We're also looking, trying to maybe get a 14-pip or so target. Or here, my Fibonacci line on my 5-minute is right here, and this is pretty much where my target zone is. And we'll wait and see. All the setup was good. We had the break we had the alert, we had the break, we had the pullback. We had the pullback. We entered our trade up where the RSI is up at this end. We got a bounce, but it came back down. Looking to see if this 8 moving average can continue breaking out of this 40-60 range. If it goes back in, we may have to reconsider this and cut our losses short. So right now, it looks like a good trade to me.
Al,
Yes.
Jay is back in the room. He's been away for a few weeks, but he's asking about the indicators. I told him they are available.
They are, we have, Jay, did you give me your Trading View login ID? If you did, it should be coming. I'm trying to get a hold of Anthony. He's been really tough to get a hold of. He's been tied up with a major business deal he's working on, and he hasn't been the most accessible here lately. But if you haven't, okay, if you have not yet, email me at hawkeye@auvoriaprime.com and send me your login ID for your TradingView login ID. And that's basically going to be, like for instance, like mine's going to be, you'll see it here. If you pull up this little box up here, you'll be able to see what your login ID is. His is my login ID. And that's what I want you to send me. And then I'll get that to Anthony and he'll activate the, then hopefully if we get a hold, we'll get him to activate it. I keep trying every day to get a hold of him, and as soon as I can, I'll see if I did send the email, and I'm just waiting for him to respond back to it. So, and that will get the Fibonacci tool and the RCS tool. We're still having a issue with TradingView on the moving average indicator and the multiple RSI indicator. I talked to the developer on that just yesterday, and we're working on a solution to get that one up and running for you as well. We just ran into some problems with TradingView that we were not expecting to have, and we have to be real careful how we proceed forward with it in order to get them to acknowledge and activate it. But it's coming. We haven't given up yet. It's just taken exponentially longer than we anticipated.
Oh, we've just had another alert, Al. The Kiwi US.
Oh, Kiwi US descending. Okay, let's take a look at that. Right now I'll tell you what, I'm going to put an alert on, I'll put an alert on this one here just to see if it breaks down the bottom of this. And so we're going to do it once, create an alert on that one. There's an alert on that, and we're going to take an alert up to up around the 30 moving average. I'll put an alert on that as well. As long as it stays in between that other range, we should be all right. Move this up, see if it comes up and retest the wedge again. If it does, we may want to look and see about what we want to do with it. See what kind of movement we get. So we have an alert there. And one there. Okay, and now we have go to the Kiwi. Kiwi USD. And we're going to clean up our charts, turn this all off. And we're just going to look at the 15-minute chart. See what the moving averages are. I can see the moving averages are all pointing down on the 15 minutes. So I want to be seeing everything. I'm going to be looking at possibly taking this thing short and as a continuation of this move down here. So we got a nice move down. We have it's creating a little flag pattern right in here. And we're going to go with 8 o'clock was the alert, and it was a descending, which tells me that this is the descending factor of this. It's in a downtrend. It's pulling back, but the wedge is going to be right in this area. So I'm going to be looking at basically, this is the overnight low. This is the overnight high. And this was where it closed yesterday. So I'm going to be looking at a trend from this pivot high to here, but the main wedge is going to be right below the 62 moving average. So I think I'm just going to draw it like that. Just going to pull off. It's descending, so I'm going to start over here. Look at the pivot bottom. Come up here where it tagged the 62. I'm going to flatten out the bottom over here and just draw this right over. I'm just going to keep it in that area. Let's see it. Maybe I'll pull up here. I'll bring this up a little bit closer to where the alert is. And we're going to be looking for a break either below or a break above. I want to see it close above the C. We have room to the A. Let's see what the A is. This would be my A would be my target area. That'd be my first target. Then we'll see if it breaks, we have room to the target. It's coming right up to the, if it does break, it's coming right up into the 30 minus 62, which could give us a little bit of a problem on the break. If we check our range stick, and I'm going to take it from I'm going to take it from between the B and the D, take it on up to where the C is. That's the way I draw them. And I'm looking for a break up here, and that brings us right on up to the top of that. See what the measurement of this would be. It's going to be 19 pips. There's enough room. If it breaks the top of the wedge, we have room to the upside. And if it breaks the bottom of the wedge, it's going to have to get through this B area before it's going to, this could be a trap down in here. Take a look at our RCS tool, and right now the New Zealand and the dollar are pretty much even. So there's not a lot of, right now they're battling out for last place. We'll see which one gets stronger as time goes on. Let's go to our 5-minute chart. Readjust our wedges, make sure we get it as tweaked as close as possible. And there's my C, here's my D, A, here's the wedge. Has this big strong candle. We had a nice big strong candle up and a strong rejection right back down again. So this is kind of a key area up in here. You can see this making a lower high over in this area. And we can draw from the from my C. If I take it, oh come on, if I take it from my C area down to that wick. So we have a trend from the C. We have a hit here. We have a hit here. We have another hit here before the wedge, although it hasn't really pulled back yet. So I'm going to hold. In fact, this one it's a lower high than here, but it hasn't really rejected this. Hasn't rejected this level. So I'm just going to note this as a area of interest. I want to see it close above that at least. It broke here's our new trend line right through here. Here's the alert, came back up, wicked above, couldn't break above that. Now it's going to be retesting the bottom. Look at my 1-minute chart and see if there's anything else I can tweak any tighter. That looks pretty good right there. I said the 30 minute 62 is way up in here. So if it does break the top of the wedge, we have, this would be our first, that would be a target that we'd expect to get a bounce off of that. But if we're looking at our 15-minute chart, again, you can see that all the moving averages are in the correct direction. We have the green. Now these are starting to, it looks like they're trying to flip here. So there's a little bit of a battle going on with that. But here's our 62 on this one. 62 is up high. And on the 1 minute, our 62 is now it's low. So I could expect maybe getting a little bit of a pullback on this. Right now, the moving averages are not aligned. They're not all going in the same direction. We want to see that happen. Not enough strength. Everything's still kind of in the middle. Our eights are still in the middle pretty much. It's not time to take this trade yet. Let's go back and take a look. Let's look at the Forex Factory. There wasn't any major news events until about 2 o'clock this afternoon. And that's going to be an FOMC minutes. That'd be a red folder for the US. So we may have a kind of a slow morning because of this announcement coming in the afternoon. They may not, it may be kind of a range bound day today. So just be aware of that. And this thing keeps popping up today. And okay, we're looking at our US Swiss trade now, see how we're doing with that. We had the break, came back, retested trend line, came back, retested trend line. Here's a little drop. So here's a little wave 1, wave 2, wave 3. Now it's coming back to retest our entry. And this might be the beginning of the move to the downside. And time-wise, 8:15. So still early enough that where we could still get a nice little move down. I would expect a bigger move probably just before the 9 o'clock 1 hour candle closes. Any questions so far? All right. Well, just right now we're just kind of in the waiting game, waiting to see if this thing's going to break. If this thing does, if it can't break this yellow line, this thing could start to reject and start going up higher. But right now I'm looking at it's still kind of trending down here on the 15. If you look on the 5-minute, here's a high, here's a lower high, here's a lower high on the RSI. So right now it's still telling me it's still trending to the downside. I would like to see these 8-period RSIs close out of the 60-40 range. It barely did it right here. Got a little bit of a push back up, but we'll see what happens here. There was a question the other day of how many times you take the hit and the losses before you, and what do you do before you blow up your account? And I really don't have the answer to that. I think that's going to be pretty much of what your personal risk factor is. We do get it. The markets do. They're living and breathing, and they do change their breaths, as so to speak. And there are times where we take these trades, and all we do is we get in. We get a little bit of a profit, or we don't get a really good fill. Then we go and we get stopped out. And usually, what I do, I give myself 2 stop outs on one pair in one day, trying to keep my stops, my risks relatively low. If I start getting to a series where I'm getting stopped out a lot, I just still maintain the philosophy, but I just maybe back off on my expectations of how many pips I'm going to take. What I'll do is I'll just take a smaller position size. I want to maintain the philosophy and the method that we use. I'm also looking to see if there's something that I can do differently as I'm studying the history of how the trades go, of how many times am I getting stopped out. Well, what can I do a little bit differently? One thing I started doing a little bit, because we've been going through a series where we get a nice little break, but we're not getting the follow through like we were a few weeks ago. And so a lot of times when I start getting that and it comes right back and starts rejecting, I'm start looking for maybe this is a turnaround to where these are all traps, and just try to catch it. If you get trapped out, keep your losses small. Because if this thing comes back in and breaks through this 30-minute 62, for example, I'll take the stop, and then I'm going to look and maybe try and take it long down here because this, and then you can make up that difference. But that's something you have to kind of work out for yourself as far as what your tolerance is. You don't want to be blowing your account, but again, no, trade a small account size, try and be consistent. And if things are just not working the way you are, something's changed. And then try and figure out how you can maybe get an earlier entry, or maybe you have to be a little bit more qualifying before you take the trade in general. And that's about the best answer I can give you on that. I think it's something we all struggle with a little bit. So right now it's still respecting the wedge. Part of the problem with this one is that the wedge is actually climbing up higher and higher. So as it pulls back, you're actually, if you get in down here, which is what I did, as it pulls back, it's still respecting the wedge, but the wedge is getting further and further away from where your entry was, which is not exactly, it's almost nicer if you can have it where it's coming down, giving you a tighter and tighter, being able to get your stop tighter and tighter. But right now I'm still respecting the wedge. If it breaks through the wedge and closes above the 62, if it just wicks above, I'll stay in. I'll hang on tight with this. I want to see if it just comes up like this and hooks. I'll give it some room. If it hooks, comes back down and can't get back down to this 89 level, then I may just try and close out my trade with a less of a loss, and then reevaluate to see if I want to be able to take it long. You can see right now it still has a nice. This was a strong move down, and now it's trying to see where we're going to go with this. My moving averages on my 5-minute chart are still in the proper alignment, green, yellow, purple to the downside, and we're seeing if it's going to bounce off this 62 here, the 30-minute 62. And here's this 15-minute Fibonacci line. This is a very strong line. You can see it came down, passed it, checked it, passed it again, checked it, passed it again. And so there's a lot of, this is an area where there's a lot of battle going on right in here. Actually, one thing I'm looking at, we have a little bit of a divergence. We had a nice move down, came back up, retested it, have a lower low, not by much, just barely broke this area right where the D is. Came down, wicked above, couldn't close above it, below it, and we have our RSI is low and it just slightly higher here. So I would say if this thing closes back into the wedge, I'll get out of this trade, take my small loss, and then look for a possibility to take it long, or to just stand by and wait for a better, wait for another confirmation. You can lose over half if you have your targets, your stops small, and your targets larger than your stops, and you can get 50% of your trades winning, you'll still be profitable. The problem you run into is if you have a 15 pip stop and a 7 pip target, and you get 50% win loss, then you're going to be losing money because your stop is going to be bigger than what your target is. So you want to trade to where you can weigh your target to a greater number than what the stop is, and be willing to take the stop out. Because even if I get stopped out on this trade right here, and I can take it long, then I've got then I have a bigger move to the other side of this wedge to make up the difference. I'm looking at 7.
Jay's saying that the Dixie's getting stronger.
And the dollar is getting stronger here as well. And the dollar is getting stronger, and on the Swiss and on my 50-minute, the Swiss is getting stronger. The Swiss is still stronger by 5 on the U.S. Swiss. So I'm still going to hang into this. I don't want to be getting out my short when this RSI is coming up here to test this 89 area and then hooks, because that's telling me that's the extreme of the move. And you can see where this is up here. This is where it came up, came down. Now it's retesting. It's coming back up here, but it's only going up a little bit. And if you look at the move from up here to here, and see where the retracement is, I'm thinking you're going to be seeing this a relatively short retracement. I'm looking at from here to here. And if we retrace it up, it's less than 40%. So right now it's right at a 38.2 retracement. With that small of a retracement, the odds of the target being, especially when the fact you had a nice strong move down, still retesting it. But here would be my target. I'm looking at my target being somewhere right down in this area. We did this yesterday, and we ended up it never quite made it down there and reversed on us. We had a nice little drop. Here's a little basin area right in here. There's a little red candle. Here's a blue candle. Came back up, and then I broke out of that. So this is a little area this is a little bit of a supply zone right up in here. If I get stopped out and it comes back down into the wedge, I may take it again. Let's see how much stop I have here. I think I've got 7 pips. I'm going to move this up to 12 pips here. I want to keep it out of this area right in here. We have the 5-minute 62 coming right into the box. I've got the 30-minute 62, and right now, and we had a little bit of a supply zone right in here. Also, we see that on this 5-minute, we have the RSI coming up here. It's about ready to hook. Now we are showing some strength there on the US and Swiss on this 5-minute chart. So Swiss is gaining a little bit more strength, but it is just a pullback.
You mean the Swiss or the US, Al?
Well, the Swiss is showing, the US is showing the strength.
Okay.
And so that's where this pullback's coming in.
Right.
But right now I'm still looking at this thing being a pullback as opposed to being a reversal.
Okay. And I'm sorry, I had to get something. So what was your entry, your initial entry?
Well, my entry was
there.
It was way down here. It wasn't a great entry. Came back and actually took the entry Pretty much right. I got the entry right here on this, I think on this red candle, but this was my fill.
Okay.
So I was we had this nice red candle come down, close. It retraced, came back up in this area. I took the trade with the market order, but I never got filled until it was like a 1.7. It's almost a 2-pip spread on this thing.
Yeah, you know what I got me confused was I saw the initial arrow that's higher up, that's in your supply box. So I didn't see that little arrow in the middle, like down lower in the entry zone. So that's why I was like, I didn't know your entry. That's why.
Oh, I see. That's okay.
Thank you.
Mm-hmm.
Yes, I should put those contacts in before class starts. What do you think?
Yeah. Sometimes I get a little blurry-eyed early in the morning too. And so I do like the fact we've got 3 things in our favor for this thing to reverse. One, we have a supply zone. We have a 62 moving average. We have the 30 moving average. And if I look at my 15-minute chart, we'll probably be looking at a, see if I can take some of this stuff off. So this can't already see what's, wrong one. Then back on the 5. Let me see if I can take some of this stuff off of here. As we're looking primarily at the 5-minute chart, there's no having all this on the 15 that we can't see what's going on with the price action. See, we came right up into that box. It's getting a little bit of a hook. We had the hook, so I don't want to be getting out of this trade. Now, if it comes back down and can't break through the bottom of pretty much where we got of this 15-minute fib line, if it comes back and just tags that and bounces off of it, then I probably will get out of the trade and look for a better entry. And maybe even change directions. The biggest thing is if you get the follow through, I mean, we can find good entries, but unless you get the follow through, and you need the volume in order to get this follow through. And that's one reason why the London and US sessions are usually the better sessions to be trading, because there's just a little bit more volume than after the early Asian session.
Well, I'm watching the New Zealand US. It's still kind of moving slowly within the wedge.
Yeah. Everything's been moving really slowly this morning. I think a lot of it has to do with the fact there's a FOMC meeting announcement later on today, and a lot of times we had a lot of alerts yesterday, more so than I would have expected on a Tuesday. Well, actually, yesterday was Tuesday. Yeah, actually, yesterday we had a lot. Was it yesterday we had a lot of alerts, or was it Monday we had a lot? Monday we had a lot.
Today there was a lot.
Monday we had a lot of them. There you go. That's getting to be a little bit more convincing. Let's see if this red candle can come down and break through this 15-minute fib line. See if we get enough strength to push that down.
Al Pedro would like that email address again to,
Here,
the indicator.
I'll put it in the chat here.
Thanks.
There you go. It's in the chat box. Oh, I think I need to, I think I didn't get it to everybody here. Hang on a second. Let me try this again.
It's in the chat box, Al.
It's
Is it?
just for all
What?
panelists, though.
Yeah, I need to get to the
Attendees can't see it.
attendees.
I'm sorry, you need to what?
The attendees can't see it. He sent it to all panelists.
Oh, I see. Oh, jeepers. Oh, man, I better go. That's like really bad.
Let's try
Oh, my
that.
goodness.
That should work. Let's try that one.
Oh, hang on. Okay, there we go. You spelled Auvoria wrong. So
Did I? Oh, see, thanks.
I just threw it in there.
Thank you.
He's just humoring me and getting in my category. That's all.
Yeah.
Oh, my goodness.
Well, we'll see where this thing goes. Right now, it's still in a range. It's range bound right now. I'd like to see it get a nice close below this 15-minute fib line. And sometimes you just have to wait a little bit longer than we like to. We got so used to early, a few months ago, we got so used to it, broke the wedge, came back down, and within 20, 30 minutes, we were getting our target and we were done. It just doesn't seem to be moving quite so fast on these breakouts these last couple of weeks. So we just have to adjust our expectations and our patience along with some of these. You look at the factors, you look to see where you expect the bounces off, and you can almost, whenever I see a 62, whether it's a 15-minute or a 5-minute 62, and I see the directions are the same, but I'm seeing it coming back to retest that. That's usually, I usually want to give enough room so that I can expect that bounce, because even if it bounces and it comes back down and it doesn't get, if it doesn't perform to the, in this case, the downside that we like, then I may just pull the trade and just wait until I get more confirmation. But right now you can see it's just still making lower highs and higher lows right now off of this last move down. I go to my 1-minute chart just and see where he had. Here's a nice move up. Here's the up. This is what pretty much, if I could draw a secondary wedge off of this. Here's a high, here's a low. Here's a lower high. Now, pretty much an equal high, pretty much right here. If you can see the A and the C are pretty much right in line. And now we have a little bit of a trend going. Here's a low, here's a higher low. Now, right now, this is the area that we're looking at. It can break again. Again, we're trying to see a break this 15-minute fib line.
New Zealand, US is breaking to the top.
New Zealand, US. Okay. So New Zealand, US, that means the dollar's getting weaker there, and here should be, that'd be right. So if the New Zealand, US is breaking to the top, that means that the New Zealand's getting stronger to the dollar's getting weaker. This one's trying to break to the side, which means the dollar's getting weaker with the Swiss as well. So that's a good sign. You're getting two different currency pairs showing the same thing with the reference to the dollar. you still need to get a break below this area right here. Here's where the original break was, right over here. Here's where our target's still the same. So basically what we did is we had a nice drop from another wedge. It's breaking out of this. So this is a drop. It's basing here. It's breaking out of that base. It's got to close. It's got to pass this B area right here. I'd like to see it close below this. If it can't close below this B, I may just pull this trade, and on this move, if it can't close below that, then I may just take this thing off and just say I'll just lose a couple dollars. We did get the close below this 15-minute fib line. That's a good thing. Still have red candles. Our RSIs are coming out. We finally got this 8-period RSI to come out of that 40-60 range. And we did that on the 5-minute and the 1-minute. Still struggling here on the 15. I don't want to be in too big of a hurry to close this out because we have a 1.5 pip spread. I didn't get the best fill off of this. But if you get out of this and you want to take it short again, you're going to be paying another 1.5 pips to get back in again. And the Swiss is still showing a little bit of strength, not a lot. It's still a battle going on with the Swiss and the dollar. See what New Zealand looks like here. Still hasn't broken through the top of the wedge here either. Everything's been very, very range bound. I'm going to move this trend line over here. This is our third hit. We had the anchor, the hit. This was the third hit. Had a nice little, not a real strong pullback. We are showing strength to the New Zealand, weakness to the dollar on this one. See how our Swiss trade's doing here. Same scenario, the dollar is still showing some weakness. I'm going to put an alert on this one. It's starting to break down. So we're getting some confirmation of dollar weakness.
Al,
Yes.
Pedro says that he thinks that the Euro USD is close to breaking through the top.
Euro USD. Let me see where that one is.
Uh,
Let me get that one up here. That was another alert we had earlier.
Yeah, I don't still have my alerts yet.
Still don't have them yet.
No, they said that I have to repurchase it. I just read the email. That's why I was late getting into the room.
Oh, okay. Well, we'll have to figure out what's going on with that.
Yeah. No, it should be a simple fix.
Yep, sure is breaking through. Here is the wedge. Here is the entry zone. It is breaking through the top. I would be looking at this being the top of this higher trend line being a target. Here's the. If I go to a 1 hour chart, just to be able to find where this thing started. We have a high. Here's our second hit. We don't have the third hit yet. We're going to see if it breaks. It's probably going to retest this trend line. So I'd be looking at a target on this one, being right up around this area.
Well, Jay was just mentioning that the euro, he said, be careful of euro due to the ECB speeching. I imagine talking.
I'm not sure what that is. ECB.
Yeah. European Central Bank.
Yeah, there was an announcement coming out. Is that what it is?
Oh, yeah, I think that's what he means.
European.
Yeah, right there.
Yeah, that's at 810. Okay. That's the euro. Okay.
Thanks, Jay.
Right now, the euro is stronger. Let's see, where is that here? Euro is stronger by 3 to the US. So that's a nice little pop there. Let's see how our Swiss is doing.
I'll just read Jay's comments. He said, retail trader data shows 37.60% of traders are net long, with the ratio of traders short to long at 1.66 to 1. The number of traders net long is 3.19% higher than yesterday and 0.63 higher from last week, while the number of traders net short is 11.60% lower than yesterday and 0.04 lower from last week. We typically take a contrarian view to crowd sentiment, and the fact traders are net short suggests Euro USD prices may continue to rise.
I would agree with that. Yep. Yeah, the majority of the traders are wrong. So if the majority are short, then you want to be long on it. And actually, that's starting to play out here. I would still be looking at taking. Actually, I need to get this thing protected here. Take profit, take stop loss. And I have my profit target being right around in this area, right about there, just before the wedge. And we'll see if I get. Let's take a look, see for the alert for the target on that. Add an alert. Create. We'll keep an eye on that one. And we have the Swiss still. This one's still giving us some problems here. It's retesting this bridge that just broke out. It's retesting the 15-minute Fibonacci. It's just pretty much range bound right now. If you look at the 15-minute candle, we had a nice strong red candle coming down. Actually, we had a series of red candles coming down, big push up, big push back down. And now this thing went up probably about 60% of this candle. So I'm still looking at this thing still going short. If we look at our moving averages, see if they're in the right position. And right now we're not quite there yet. We have a, oops, that's 1 hour. That's the wrong position. We went 15-minute here. There we go. These are in the right position. We have the 62, 13, and 5 all in the right direction. Still looking to try and go short. It's still respecting the green green 5-minute period on the 15. Still respecting the 62 on the 1 minute, respected the 62 on the 5-minute. And it's actually forming another little wedge. It had a nice drop, and here's another drop, slight little bit of a wedge right in here. This is the channel that it's in right now. It's a very, again, this is probably a fairly narrow channel. It's only 3 pips. Nothing to worry about with that, other than you want it to break out the bottom here. If you look at this channel, it's probably pretty much the same thing. We had this other little wedge where we had a nice drop, base it broke again. And we wait. I'm still going to hang into this trade. So it looks like it's trying to trend on down, just taking a sweet time doing so. Dollar is still showing weakness to the euro by 4 on the, this is a 1 hour chart. Let me get this back on a 15-minute chart here. All of our moving averages are in the correct direction. And so we're looking at the top of the wedge as being a target area. And I'm also looking at the blue fib line. In fact, I'm just going to let it go for the blue fib line rather than, this is a nice little trade for me here. I could take that. And it's almost 9 o'clock, so we can expect a big push here in another couple of minutes. Let's see if that makes a difference. And let's see, right now we still show on the Swiss and the US are pretty much neck and neck for the last place here. We did get the break of the 8-period moving average below this 40-60 range. Everything's pointing down, trying to point down. Nice little break coming up here.
Actually, this New Zealand US is a nice little trade. I got into it. It's a couple of pips away from my target.
You must have got into it early. You must have got into it right when the moving averages broke this trend line.
I got into it at 65928.
6592. Yep, that'd be right about in, yeah, right as a 5-minute broke this initial trend line. Here was the wedge, but here was the trend line that the wedge, it was breaking in beside the wedge. About ready to hit my target on the US. And the US Swiss were coming in. We're finally profitable on this one. Still need to get so I want to see it close below here. So we're already in this trade. I was just looking at this this isn't necessarily waiting for it to close below. I'm just looking for a reference. I want to see it break this B area. And then it should come down, give us a little bit more room to the downside here. Still struggling with this little area right in here. Swiss has been hasn't been real volatile like some of the other pairs, like the Euro US and the New Zealand. New Zealand's actually been a pretty good pair here lately. They probably should have looked at that trade a little bit more. See, that was at 8 o'clock. But we'll see what happens with this. About 3 more minutes before the 9 o'clock candle closes and the new one opens. The 1 hour candle. Still couldn't break through the bottom of this, where this B is on this wedge. And my D down here and see where this brings us. So basically we had a wedge up here, it came down, gave us another little wedge, broke. Now it's retesting the top of this wedge. We did get the break of the 15, came back, retested the 15, broke, formed a wedge, and now it's coming down again. We have a little hook up here. It wasn't to the extreme, but it did come up, and it's given us a higher and then a little lower high RSI. 15 minutes are still out of the 40-60 zone. It's still a viable trade here. It's just taking a sweet time. And I'm going to take profits on this one. And this is New Zealand. Here is the break. And we'll see if it comes back in order. This was the break of the wedge. Here's the 1 minute candle close was, actually we had our, let me get our zones here. Here is the wedge. I'm gonna go and put the 2 pip area to see where we, so Eva said she's already in this one.
Yeah, I just got out. I just got
You just got
my
out.
2%.
Okay, good. Good for you.
Yeah.
Let's see where we can get this. This is at 65, 96, 98. There's where that 2 pip range was. So as you can only watch so many different charts at one time.
Yeah,
That's part of the problem.
that's it, right?
But here's the, this is where we made our stick from the C to the, actually it was a little bit long here. Took our stick, here's the break of the wedge. We had our 2 pip break, close, and then this one, here's our 5 minute close. Now the thing is, if you're trying to measure with the stick, if you don't get in until here, you still can't expect to get, you're not gonna be moving the stick up. You have to still look at the stick coming in off the trend line, wherever that is. And depending on where your fill is, depends on how well you're gonna do with this. You still have a fair amount of room to the upside on this one. It's still 16 pips to the upside, but you do have this moving average that I'd be concerned about. So right now you'd be looking at maybe, since if you didn't get in, you'd be looking at a retest of the wedge for possible entry. Back to our Swiss trade. Still the same thing. The fact it hasn't materialized, I'm just going to get out of this thing. I don't like what, the fact it hasn't been able to break out, I'm just going to stop. This one just isn't working, and it's coming back up to retest the 15. I'm just going to get out of that one. Let's take a look at the New Zealand. All of our RSIs are up here at the top, so I'd like to see them come back down and give us another, maybe a higher hook on the RSI, and then could maybe try and take it long again. It is definitely you don't want to try taking a short with these moving average, with this RCS tool being with a 6-point spread. You don't want to be doing that yet. There's still a lot of strength to the upside. So right now you're looking for a pullback. I'm going to go to my 1 minute chart and see if I can get a 1 minute tag on the 62 on the 1 minute. And then re-enter possibly on that. So we know it broke the wedge. We know we have our little 2 pip area right in this area here. See if it comes back in, gets another chance to maybe get another entry onto it. So all you need is one good trade a day.
Yeah, I always tend to give it back if I decide to take another trade after a successful one.
Yep, and that is the big danger. Now, one thing that we'll see here is on our 15-minute chart. One thing I don't like on the 15-minute chart is that we have, it did break. Let me take some of this off here so you can see what I'm talking about. Just going to take this wedge off here. We do have our 62 coming down, and right now all of our 62s on this are not in the proper direction. It is on the 5-minute. We have the 62, the 13, and the 5 going in the up direction. You do have this 13 up here you have to be looking at as possible target. The 62, the 30-minute 62, you have that as a possible target. All the moving averages on the 1 minute are in the right direction, although it's starting to come back and retest the wedge. If we get this thing to come back, maybe retest the 62 and then get the green crossed and back over the yellow again. Right now it's just about to cross. If it can't cross and comes back up, that would be the other entry. This is forming a small little wedge right up in this area. You see we have a high, we have a couple lower highs on either side of it. I like to see a little bit of a pivot bounce and then a strong move down a little bit to come in, retest this area, and then come back up again. You can see how on the Euro US, you can see where the bounce, this bounce off this 60, off this Fibonacci right here. It just came right on up. Didn't quite hit it and starting to bounce off of that. Let's go back to New Zealand here. We have the hook. We did get a higher close on this 15-minute candle. And if it can break the top of this red candle, we're looking at only 6 pips to the upside on this. This trade may be just about done. Let's see, it couldn't quite break through that the C area where where we had the wedge. Hit the anchor. Here's our C. It broke. Actually, this was if we were to use the trend line. I was looking at this trend line off the C prior to the alert. That's what I was looking at here. Anchor, here's the hit. Here's the hit right past the alert. And then it broke. This is probably about where Eva got in. You still have the major trend line, which was basically this area from up here to the A to the C.
I drew my wedge just a little bit different than you did, Al. That's why I was able to catch the break when it broke out. My A was where your C is.
Yeah, I could see where that would be.
Yeah, and my C was where that big wick was of the red candle.
Let me draw this. This was the top of the move prior to the alert. And then you probably drew it something like actually there was a hit, here's a hit. So here's actually where the upper trend was. I still have to hold it up there because it's crossing wicks. But you were looking at pretty much from here to
I can show
here.
you my chart.
Okay, we might just have you do that. Let me just get this. Go ahead, let's see, let me get you start sharing. I'll stop sharing and you can show us your chart and show everybody how you did it.
Okay, so that's my 15. So, and I also drew a higher trend line that kind of corresponded with my A and my C. So, oops, just ignore that. So my A was here. I kept it within the day, this
Okay.
being the break. So my A was here, obviously B, and then the C was actually up here. And the D was down here. So then on the 5 minute is where I tweaked it, which is
Okay.
where I trade, as you know, because I'm scared. I'm a scaredy cat to trade them 1 minute. So then I just kind of tweaked it and put my C here. And my D, as long as it kind of lines up, I don't specifically put it under something, as long as it just kind of validates.
Okay.
So this is where I ended up breaking out. And this
Yeah,
is
you
where
never really got the third hit off that BD line. You never really got your third hit. The D was actually the second hit.
Yeah, but because it came like 3 little hits in one
Yeah.
on a 5 minute, to me that was good enough with this.
Mm-hmm.
And that's why I drew it that way. And because it was playing up here when I drew the wedge anyway, I was pretty much anticipating that it was going to go up. If it would have come back down, then I would have seen whether or not it validated at that point.
Okay, that's right.
So
Actually, what you actually had was you had the break you had a validated trend line with your AC, and that white trend line was actually a validated trend line that got broken after the third hit. So you had the anchor, the hit, you had the third hit, and then it got broken after that. So it's
yeah,
on the fourth hit, it got broken.
yeah. So and that's where I caught it, was once this one broke through, and then I waited for this one to make sure that it was just going north. And I was looking at the 1 minute at the same time, and the RCS, and just all the indicators, of course, but I was looking at the 1 minute too, so that if the 1 minute had a red candle form, then I just kind of waited. But it really didn't. It kind of just kept on going in green, and the red didn't actually form until afterwards. But then by then I knew it was on its way, so I was already in it at that point, so I was good with it. And it just worked out for me.
Oh. How many pips did you get on that one?
7.
7. Okay.
Yeah, I like the 7. I put this as my target, but it was like 0.2 of a pip less.
Yeah.
So it hit my target. It went up here and right away came back down again. So for me, 7 pips I find works. If I shoot for more, I always lose. I don't know what it is. That's just me.
Well, it's part of it's the emotion that gets involved with it, because you get your 7, you know that's what your main target is. We want to go for the bigger runs, but oftentimes there's a sacrifice to that, and that is you have to give up those initial gains. A lot of times you go back, you take that 7 pips, you go back, wait for the retrace to get a second position. But oftentimes what happens off these wedges, that second position is only the beginning of the move to the other side.
Yeah.
And I mean, sometimes you get, sometimes, I mean, it's a crapshoot. Whether you want to hang in there for the longer run, but you have to be more patient, and you're better off just walking away, keeping your stop where it originally was, and just walk away and accept the fact you may get stopped out, or you been able to let it develop to that longer trade. But that's a tough call. I find that for myself, 7 pips works out pretty well. 5 to 7 pips, and if it starts showing signs of reversal, then I usually just take the profit and say thank you.
And that's it. And what I do is I put 7 pips as a hard target into my trade.
Yep.
So that I'm totally hands off with the target. Even if I think it's going to go higher, I don't care. I get my 7 pips right down to the nano pip, and I'm out. And it tends to work out really well for me. And a lot of this is based on how you do it as well, Al, because we're looking at, obviously, for the break to kind of come to wherever it comes. And it's usually the C. You want it to close after the C, which would have pretty much been it, because I got into this trade at 65928, and the C is, as you can see, is 6593. So I would have gotten into it right here. So it was kept on going. So
Yeah.
and then
Well,
from
a lot of times you can get those little bit earlier entries. There's actually a couple of pips, or oftentimes can be the difference between a winning trade and a losing trade.
yeah, I just find it really works for me.
Yeah.
You know, I would love to get one of those runs where it goes for 17, 20 pips, but invariably then the emotions for me, I haven't lassoed them properly yet. And that's always my undoing. So I don't even
Yep.
bother. I don't even
Yep.
go there anymore.
Yep.
So
Yep. And if you get consistent with the 7, and if you get good enough with getting those 7 pips, then maybe you just advance yourself a little bit. But have a method of doing that. And but usually there's a give and take to that.
yeah, so I'll stop sharing now.
Okay. All right. And this Swiss trade just is still sitting there, just meandering around. It's just kind of, it never did. Once we had this big candle break, it's still basically trading inside this whole region where it broke, came back, retested a little bit, came back. It hasn't broken through the bottom of here. And we're still looking for that to happen with the original break, which was right here. But it just, every time it comes down here, it gets pushed back up again. And so there's a lot of buyers, a lot of pressure right here around this 15-minute 62, this 15-minute fib number. And that's a key. It's going to be a key area. Once it breaks from this, it's going to be a pretty significant move, I believe. And you see the main thing, it came down into it, broke it, tested it, broke it. So right now it's just basing right in between this area. I'm going to put the area right between, right in this area right here. This is the playground where it's playing in right now. And that's only, let's see, what is it? This is only a 5, it hasn't moved out of a 5 pip region for the last, how many bars is this? The last almost 2 hours, it hasn't moved out of 5 pips. And if it breaks, it's probably going to break pretty hard. But the question is, how long do you want to be waiting? Especially when the average was about 30 minutes into a trade from the time you get into the time you get out. And this thing's been out for 2 hours and it still hasn't really broken out of a 5 pip range. But that's been kind of typical of the Swiss here lately. You will get some good moves, but they take forever. They seem to be taking forever to develop. Unlike with that New Zealand trade, where we had the alert, and within
yeah, that one looks like it's
within
done.
about let's say that was an hour. That's a 5-minute from the alert to where you enter. Well, from where you enter the trade, it took 5 minutes to get 5, 10, 15, 20, about 20 minutes to get your target.
Yeah, it's not too bad.
No.
I wish they were all like that.
Yeah,
That's all I can say.
we have to respect these upper trend lines. But when we get the alerts, and usually what happens with these alerts, you'll get the alert after a nice move down. And so you have the move, you get the alert, and oftentimes by the time you get that alert after that big move, it doesn't take much time before, I mean, oftentimes I just see on that alert candle, it just breaks on that candle. This one didn't. This one still sort of held the wedge. But also,
and I like it when that happens. It kind of validates the whole breakout as well, I think.
But you have to be right there. You mean when it?
I like that it stays within that it respects the wedge, and then
I do too.
Yeah, because then you see that. Okay, well, first off, I've drawn the wedge properly because it's staying within it, and then once it goes, it goes.
Right.
Most of the time, anyway.
Yeah, exactly. And you can see as you draw this thing, you can just align the D with the AC line. This is your trend line. This would be where it reached, but this is also the next point of where the B would be. But now I would still come over here and I draw that to the B and see where the trend on this one would be. If I can get this. We have about 10 minutes before we have to be out of here. You can see how this trend line is, this trend line is holding here like this.
Yeah.
Here's the anchor. Here's a hit. That's the second hit. This is the second hit. This is where Eva had her D. And then you can just sort of take this and align it with the trend line. You can do it like that, waiting for your third hit somewhere in between here. In this case, it already broke out of the top. Yes, Christine.
You couldn't consider, you know where the B is. There are two candles there. There are two separate 5-minute candles that have their wicks there.
Right here.
Yeah. So you couldn't count that red and blue as like hit 2 and 3?
No, I count that as 1.
Okay. All right. No problem.
Yeah, you want the hit. When you get the hit, you want it to pull back off of that. You want it to bounce off of that.
Okay.
And so you just use this as this is where the hit was. This was the bounce off. So once you get that bounce, then you can mark that as the hit.
Okay.
Okay.
Hindle's saying that the NZD is retesting. Yeah, it appears to be Hindle.
Yeah.
Retesting the wedge.
I'd be careful taking the second time.
Yeah, it's starting to lose its strength too.
Yeah.
The NZD. That's the one thing I'm finding with these wedges, that occasionally you can get like 2 trades out of an alert, but I'm finding, generally speaking, you get one good trade, then you should just kind of leave it alone.
That's been my experience as well. You're right on target with that one. Yeah, go for this. It's like go for the 7 pips and then wait for the next train to come to the station.
Exactly.
And like I said, no, I was just listening to. There's a guy by the name of I forget his last name, but anyway, he started trading when he was in high school. He's a multimillionaire now, and he just started going. He said he was looking for penny stocks. Tim Stykes is his name, and he started trading penny stocks. He just going for those small profits, and now he's a multimillionaire. He's been doing this for about 20 years, but again, he said he doesn't go for the home runs. He just goes for small trades, small profits, and just keep on adding it and adding it. He's not going for the big. He deals mostly with stocks, but he does, like I said, penny stocks. So they're looking at a couple cents or a couple dollars for any. Just waits for a 2-cent move on on a 4-cent stock is a pretty big move, and if you just have enough contracts on it, you can make quite a bit. And just wait for and usually those are the stocks that they're going to have some widget that's going to either make a home run or become something or become nothing. But again, go for the small. Go for the these. This is what we call the new paradigm trading. Is you're going for small profits, load up the contract size, go for small profits, and get your daily bread and then move on. This one might have a little bounce. I like the fact it bounced off the 62. I like the fact that on this 5-minute chart, the 5 moving average hasn't crossed over the yellow, and we're starting to get a close above it. So this could be one of those that you can maybe get that extra bounce on it, and look for the target of from here to here. I have a pullback. This was a 50% pullback. And now it's looking to see if it's going to retest this area. Pull back 50%. And now look and see if it breaks. If it breaks, then it may be coming up here to the 30-minute 62. And when you start seeing these things start lining up, that's a pretty good sign that you're not too far off the mark.
Yeah, see the kiwi's getting strong. And what is it like on the other time frames? The strength of the kiwi.
On the other time frames. Oh, let's take a look at that. Kiwi still 3-point spread, 4-point spread. Yeah, this could be a pullback. This could be a nice little pullback on us. It bounced off the 60. Well, actually penetrated the 62 on the 1 minute. We did get a cross, but now we're getting the cross back again. And we're looking at the 5 minute. The yellow trend line is still in play. It came back, it penetrated the yellow, but it bounced off the 62. But right now, it would need to break a trend. If we have a little bit of a wedge right in here. Okay, let me just take this off. And we have nice move up. And so right here is your little wedge right here. So we have, here's a high, here's a low, lower high, higher low. Flatten this out on the bottom. Maybe move this out a little bit, see where we at here. Actually, I kind of like this a little bit better, perhaps. Bring it down to here. Anchor. There's a hit. Take this, flatten it out along the top. Let's see if we can get some, and see if we can get a confirmation to maybe, but right now you have to be looking at this as being your target up here. If you're looking at a target up here from this candle, you're only looking at 3 or 4 pips, but it'd have to break that. But if you're looking at, if you can get in down here, here's your trend off your 1 minute. So here's your A. We had a flat top, but we're going to look at another trend. And we're still thinking this thing's going to go long. Anchor. There's a hit. Here's a breach of the hit. Still lower high. Our moving averages are now crossing. We've got everything. I'm looking at this area right here. I would want to see a close on this, where this red candle, where this series of red candles came down. This is where the basing was. It had a nice rally up, came back down, retested it, came back down. And so here's a drop, base, drop, retesting this base right up in here. And on that note, are there any more questions? Is everybody still here? Looks like we have about 3 more minutes. So I'm pretty much, I'm not seeing any new alerts. Nothing new to be trading here.
Did anybody take anything today? Did anybody do the Swiss or the Euro or the New Zealand? I'd be interested to see.
I basically did the Swiss and really didn't go anywhere, so I got out of it. It's still going nowhere. Looks like the Euro and the New Zealand were the ones to be taken today.
Lost on the Swiss, Leslie. Well, that's a shame, Leslie. But you know, we win some, we lose some. I don't know, as smarmy as that sounds, it's just the way it is. I'm the queen.
I think we've been having problems. About 3 or 4 weeks ago, the Swiss was one to be trading, and then it just got to where it would give us entries, but it wouldn't follow through. It would follow through later on in the afternoon or later on in the day, but it wasn't giving us. So that was probably not my best choice for today. But I was already in it. That was the one I was looking at from 5:15 this morning. The Euro US did materialize. I think it did materialize. Finally, it took, and this was the target up here where they had a nice big move down, came down. It gave us this is our playground here from up here to here. Let me just redraw this one just for the heck of it here. But here was this was the nice big move before the day closed yesterday. Here was the overnight low. Here was the move where this big move came from. So ideally, and we had the alert at US at 6:30. Here's the alert. Here is the alert. This is the where the wedge. Here was a strong move down, came back up, gave us a. Here's where the wedge alert. This was the wedge area right here. But we still have to respect the other time frames. It was a descending wedge. Yep, descending. So I'm going to start up here to the bottom to here, tuck it in. We had a little bit of a fake out down here. This was the alert candle. I'll make this one orange. But we also have the trend line. And actually, let's do it this way. This is the bigger box that we're looking at. High, low. And then we had this. But then we had, that was the major wedge. And then we have the inner wedge from the C. And this is one really that we're looking at for the alert. This one to here, to here. We'll flatten out the bottom. Make this one yellow. I just wasn't looking at this one. And then we had the break. Now this was a pretty strong break on this. This candle right here was not conclusive enough. This one was a strong one. Now the question is, could have you gotten in enough to, from this point here, could have you gotten in? I'm not so sure. It would have been, how many pips is that from the break?
What about the bottom of the second?
That's a 15-minute candle on that. But let's take a look at what it looks like on a 5-minute chart. And then we're going to have to go here because we'll get kicked out if we don't. So here was here's a 5-minute break. So from that point, let's say you got in from there to here, you still have gotten your 7 pips.
Oh, good
So
stuff.
that one still would have worked okay. And on that note, everybody, it's we've got to get out of here because Susan's Batchelder has her thing at 10 o'clock. You may want to go and watch that. See if you can find some other tidbits of information that may be helpful. Until then, we will be back. I believe we'll be here tonight at 9:30 Eastern time. If anybody wants to join us again, and stay green. Until then,
Okay.
see you tomorrow.
See you tomorrow, everyone.
Have a great day, everyone. God bless.